Here at Tom's DIY Investing, we help people to improve their financial knowledge. Our content ranges from financial news to personal finance tips and investing guides for real estate and stock market. We want to help you get past financial struggles so that you get closer to your goals. It can be challenging to understand the world of finance without adequate assistance and support. We can help you go through various financial challenges and find the best solution. This is all free knowledge about money. Plus, we keep you up to date with the latest industry news. Tom's DIY Investing is the ideal place for anyone interested in investing, improving their financial knowledge, and navigating any potential financial hurdle. We post new insightful videos very often. So, in today's video, we are going to talk about another statement which is related to Atahul Limited, a public listed company in Pakistan. If you are trying to invest in stock market in any foreign country, and just to say you are investing in Pakistan, you decide to invest in Pakistan, which has very high potential. So when we come across Pakistani stock market, we are discussing a company that is Atahul Limited, a dairy company, which has statement of financial position, which contains assets, liability, and equity. It has statement of profit and loss, which contains revenue, expenses, and some notional gains we talked about in our last video. Now we are going to talk about another statement, which is called statement of equity. There is not much that we can discuss about the statement of changes in equity. We already discussed the term equity. Equity is the investment in the form of shares that the investor actually purchase and provide finance to the company. And another way of investing is by reinvesting the profits. For example, I already gave an example in my first video. I state this example. You have your company, you have invested say 1 lakh rupees in that specific company, or $1 lakh in that specific company, and at the year end you came to know that your finance manager tells you you have earned, or the stock market tells you that the company had made a profit of around say $10,000. So the company is not going to distribute all its profit, that is $10,000, to its shareholder. That is, if you hold, for example, 10% of the share, 10% of the total share capital of the company, then you will not get $1,000 against an investment of 10% share in that specific company, because the company is going to reinvest some of the profit. The board of directors of that specific company will decide whether to distribute that profit to the shareholder, or it is feasible for the company to reinvest those profit into the market so that they can earn, or they can tackle the technology change, or they can increase their total revenue in the future, or they can invest in they can replace their current property, plant, equipment, or something like that in the near future. So some reserves are general. These reserves are for working capital nature, because the company needs fund to run. When you say that you have a company and you want to invest in another company, then first you consider something. With the passage of time, the company will grow, and you will need money to reinvest in that company. Whether if you go to another company and invest in that company, the current company will grow, and it may feel like you will get liquidity problem in the future. The main reason is as the company grows, the overall working capital cycle is increased. There there will be inventory that you have to spend money on inventory. You have to hold inventory. You cannot go just in time type of inventory based module, because if you are in a FMCG type company or manufacturing type company, you have to hold raw material, you have to hold finished goods, so that they can be sold later in the market. You can meet the demand of the market. So there are a little bit increase in the sale, and there will be an increase in the overall working capital of the company. So you cannot say that you have earned a profit and you will not reinvest it and you will withdraw from the company. The overall growth of the company depends on the reinvestment of the funds. So the director normally decide that they will give only 10% of the total profit as a dividend to their shareholder, and reinvest the entire fund to the company. So looking at the statement of changes in equity, there are three terms that are used in that statement, and you will normally come across these three terms. Number one is share capital. What is share capital? When a company starts its business, to start its business, it needs money. For that, the people who are going to start that specific company go to different people, ask for money, and say, become our partner, and we will issue you a specific share of profit to you if the company earns profit. So the people who join and become part of that scheme, they become the shareholder. The people will start earning as the company grows. So the total number of shares that a company issue shows the total number of units that different people might hold. If a company has issued 1 lakh share, it means that there are people who can hold either 10%, 20%, 30%, or even 100% of the share. If a person want to change the percentage of their share, they can easily change it by just going to the stock market and by just trading that specific share in the market. The second term is capital reserve. Capital reserve is something like you have a business, you are earning profit, and you say your plant is going to lose its value after a new technological reform introduced in the market in around 10 years. So the life of your plant is around 10 years, and you have to dispose of that plant and shift to the new technology. For that, you make a specific reserve and say the profit that my company will earn will be distributed to 3 categories. Number 1, we will give something from it to our shareholder. Second, we will invest in another company and earn profit from it. Or we can hold funds in a separate bank account so that if needed in the future, we will use that specific fund to meet our needs. So the second type from which you will earn profit, and you just want to invest in future long-term projects. That is, you want to construct a new plant, you want to invest in a new type of property, plant, equipment, like that. So these are all types of reserves that you can have. There is a revenue reserve. Revenue reserve is like your working capital reserve. You have this reserve because you want to invest in another company, but for specific reasons, for your working capital reasons, your company is growing and you want your company to grow. For that purpose you need funds, and you cannot invest these funds in another company. You need to meet the specific demand of that specific company. For that you will get this one. So if we see the financial statement of that specific company, we see that the company has around 1.4 billion total shares issued in the market, amounting to rupees 10 per share. So the company is issuing bonus share to its company shareholder, and the total reserves it has right now is 937 million. Reserves are not that much because the overall worth of the company is too much, but the overall reserve is very low. It shows the company is not earning good profit in the past. So if we see the future prospects, the company is still earning some profit from it. So we can say that in the past, when the company has invested in the specific business, in their business, there were not heavy profits, or the company was and was not good enough to generate profit for the business. So we have to understand these because when choosing a company, you have to know what is the past data related to it. So by seeing the reserves of the company, I can say that I need to look back into their financials and see that whether they were generating good profit or not, because from that it seems like the company might be generating some good profit in the recent past year, but it might have generated very huge losses when it has started the business. Those losses might be compensating these huge profits. So these are the things that you need to know about the financial statement. There is another financial statement, that is statement of cash flow, which contains the uh, entire cash cycle of the company, that is related to the operating activities, investing activities, financing activities. So there are three types of activities. You should know that a company always do three types of activity with its cash. Whether it can be an operating activity, that the cash is used in the operation, that the cash is generated from the operation. Investing activity, the cash is normally invested in the investing activity. And the final one is the cash related to financing activity. The financer, our financer, including our shareholder, maybe reinvested their profits, or they have invested new money. The company has issued the new share capital, or there is a major financing source from bank. The company may have generated sources of finance from another company. So that is normally banks, they are financial institution from where you can earn money. So you can generate money, and they only charge you a specific amount of markup for that purpose. So you need to understand all these terms very well before you start investing in the stock market. Other than the financial position of the company, you need to understand the economic condition of the market, because the share price of that specific company normally varies with the economic situation of the company, it is not changed with the with the specific financial performance of the company. You can say that if there is a political instability in the country, the stock market might crash in the future. Or you can say that if there are good benefits, the government is giving tax compensations to the company, the company might grow, the overall stock market might grow, and it will impact the overall price of the company. So for example, if you are from IT sector in Pakistan, the government has given a huge tax benefits to them, and for that specific reason there is a lot of investment in that sector, and for that specific reason the overall price of share related to that company is now touching the skies. So thank you so much for your time. Take care.